Welcome to Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Today, we're live from SuperReturn Asia in Singapore, where the movers and shakers in the world of private capital have gathered. We'll be joined live on location by prominent tech investor Jack Selby, who's deeply involved with notable companies such as SpaceX, Palantir, Affirm, and many more. He's the managing partner of the venture capital firm AZVC. And later, Kline, who brings more than 20 years of deep tech and investment experience. She's the founder and managing partner of Raisewell Ventures, a global early to mid-stage fund bridging the best of Silicon Valley and ASEAN. Meanwhile, Asian stocks hitting a record high after Wall Street reached new peaks as investors bet on a Fed interest rate cut this week. A U.S. court foils President Trump's attempt to oust Lisa Cook from the Fed board, while the Senate approves his pick, Stephen Miran. Also aiding market sentiment is a framework deal to keep TikTok running in the U.S., with Trump saying he'll speak this week with China's Xi Jinping.
We had a very good meeting with China. I was surprised. I didn't expect it to that extent. And I'm going to speak again with President Xi on Friday. And, I think that'll confirm things up.
Welcome to Insight. Asian stocks hitting a record after Wall Street set new peaks as investors bet on an interest rate cut by the Fed this week. Both Stephen Miran and Lisa Cook are set to be at that critical meeting starting later Tuesday, when the central bank is widely expected to cut by 25 basis points. That's after a U.S. appeals court blocked President Trump from removing Cook just minutes before the Senate voted to confirm Miran, a close advisor to the president as Fed governor. Let's get the market's perspective with MLive executive editor Mark Cudmore. And Mark, this really is a pivotal moment for U.S. monetary policy.
Absolutely, Haslinda. We're now finally seeing the White House, someone holding a role in the White House and the Fed at the same time. It is a further step in the erosion of central bank independence. Now, it was very much largely expected. So in yields, we're not seeing much reaction yet this morning. We are seeing further pressure on the dollar. And I think, in fact, that is the way that we'll ultimately see this most expressed in markets. It's another kind of blow in ensuring the end of U.S. exceptionalism, and that is played out more through dollar weakness over time. We're undermining the institutional, the policy credibility of the U.S. at the margin. On the yield side, people are torn between the fact that this, increasing control of markets, intervention in markets by the White House, by this administration, will be a juicing of markets in the short term. So you're increasing the long-term risks, but it should actually help stocks. It should help bonds in the short term. So how do you kind of trade those two different time zones? That's why the yields play is much harder, and it's easier to see the kind of the impact of this intervention from the White House in terms of dollar weakness.
Mark, a lot of people are talking about possibly expecting unconventional monetary tools, even YCC, which has been adopted by the BOJ. I mean, are there expectations that such policies, such tools could be adopted as well?
It's a serious conversation. So first of all, I don't expect it imminently. There's two really contrasting issues here. One is the fact that the administration has very explicitly said they're targeting the curve, they're targeting the long end yields. There's several different people in this administration that have talked about getting long end yields to juice the housing market and also to decrease the payments that the U.S. has to pay on their debt, to decrease the kind of the debt burden of the U.S. So they want long end yields lower. On the flip side, many of the administration, and including the same individuals, have criticized things like QE, have criticized some of the intervention in the bond market by prior Fed kind of eras. So therefore, which wins out? Ultimately, I don't think intellectual kind of credibility will be the winner here. I think it'll be the ends will justify the means. I think people will push to get kind of yields lower, and that means at some point next year we might be talking about yield curve control or QE.
And the dot plot, that's in focus. How might Miran change shape the dot plot? I mean, people talk about expecting even a bigger rate cut, not just 25.
Yeah, I don't think we'll get a bigger rate cut today, but I do think what we'll get is a dot plot which signifies that we're going to get more rate cuts. This is the start of an ongoing rate cutting cycle. And that seems unusual at this stage of the cycle, economic cycle, given that growth is good. Yes, we're seeing a cooling labour market, but from great strength previously. So I think it's going to show an aggressive cutting cycle when the economy is holding up okay and stocks at a record. Again, that is juicing the market in the short term, creating longer-term risks, creating an inflation risk, creating a potential stagflation risk. So I do think that what we'll see the impact of Miran is we won't get bigger than 25 basis points today. I think that's very unlikely, but we will get a signal that there are more rate cuts to come, and we'll see potentially dissents on both sides of the spectrum. People saying, hey, we shouldn't be cutting at all, and people saying, maybe we should be doing 50 basis points, and that would be quite unique.
Mark, great stuff. MLife Executive Editor Mark Cardmore there joining us from Singapore. Now, my next guest is a technology, finance and independent film entrepreneur. As an active technology investor, he's involved with notable companies such as SpaceX, Palantir, Affirm, and many more. Let's get insights from Jack Selby, managing partner of venture capital firm AZVC. Jack, good to have you with us. We've been talking about the Fed and expectations of rate cuts. We know that is actually a positive for fundraising, yeah? Lower rates environment.
Yes, lower rates will definitely be a tailwind for companies raising money, funds raising money, because otherwise the environment has very much been an Arctic winter here for the last several years.
But how much of a boost would it provide? We know that when it comes to AI investment, that's not a problem, but the overall VC investment, that's been, well, pretty lackluster.
It's been lackluster, and I think there are a couple of reasons. One aspect that folks maybe don't talk too much about is that there are so many unicorn companies from the last cycle top, so 2019, 2021. Those unicorn companies are almost like zombies now, and so the best of those companies have been able to go public through a cracked open IPO window, and then some of the additional companies have been able to be acquired. But the majority, if not the vast majority, of those kind of fallen unicorn companies are in difficult straits, and so they'll either get shotgun married or they'll ultimately go bust. And so with that as kind of the backdrop, the fundraising market has been very difficult.
When it comes to AI investing, right, I mean, we're seeing massive amounts of money getting into the space. As far as AI investments are concerned, we're talking about, something like $1 trillion already. I mean, what do you make of such a massive amount and, I guess, a lot of optimism around the space?
So we run a large venture capital fund in Arizona back in the U.S., and so it's the largest funded by Arizona standards, non-coastal as we like to call it. But the euphoria that's going on in coastal VC, especially around AI, I think arguably may be the biggest bubble that we've ever seen in private tech investing in kind of modern times. So as an example, OpenAI had to revise their cost estimates for the next 4.5 years upwards by 250%. So a rounding error, so to speak, of only $80 billion. And it just seems insane to me, because if this had been a publicly traded company, the stock would have sold off by 90%. But instead, there are just these breathless storytelling narratives around how all the AI trees are growing to the sky. And I think when the dust settles, whenever this bubble pops, there's going to be tens, if not hundreds of billions of dollars that will literally be incinerated.
Can you draw a comparison to the dot-com era when that bubble popped?
So when we were doing PayPal many years ago, the search engines were finally kind of coming into existence. So Yahoo was kind of the incumbent, and then a little company called Google came in to challenge that incumbency. And there are other search engines like AltaVista and Lycos and other companies I probably don't remember. But most people will not remember Lycos and AltaVista because they went bust. And so one of the questions to potentially ask yourself is, what will be the Lycos and AltaVista equivalents for today's AI breathless environment? Because there will be many. And I think there will be companies that, when the dust settles, will survive and do quite well. And I'm sure OpenAI has a good chance of being one of those companies, and many other prominent companies as well. But at the same time, there will be many, many other companies that will just not survive. And those companies will incinerate billions and billions of dollars of capital, of LP's capital, in the various venture funds that invested in these companies. And that shakeout will be massive.
And when might that happen?
So I don't think anyone has a crystal ball, but let's say arbitrarily it's 5 years out, because that's when OpenAI had to revise their cost estimates between now and the end of this decade. So if we use that as an arbitrary line in the sand, maybe that's a good time measurement, because I think right now, the AI companies are great for all of us as consumers of their products because it's very deflationary. These products are very efficient. So we all get to use them, whether we're consumers playing with ChatGPT or as a venture capitalist. These AI companies are creating ingredients that we all get to use in the kind of the menus of the companies that we create. So we're getting these ingredients at pennies on the dollar of what they actually cost. So it's kind of like 5 years ago during the last market cycle top, when every company seemed to be the Uber for this, that, or the other. So you can get a shirt dry cleaned for 10 cents, when in reality it probably costs $10. So while it costs 10 cents, use the service. But at some point, it's going to have to be priced at cost and probably with some margin. And while that time isn't here yet, it will be here soon enough.
Do you need to draw the distinction between AI plays in the US and AI plays in China, for instance? When you take a look at the valuations, extended on the one hand, still pretty cheap on the other, they say.
Sure, and as an American investor, it's much more difficult to invest in China. That's just the unfortunate geopolitical reality today. So I think if you did have the ability to invest in AI in China, there are probably some very good opportunities, especially on a relative basis, relatively cheap. Is OpenAI worth $500 billion sitting here today? I have absolutely no idea. How would you underwrite that? That would seem to involve a lot of assumptions, and especially if cost estimates are being revised up 250% over the next 4.5 years, it would seem to be even harder.
I guess when it comes to the AI space and the chip race, we have to draw the trade war into this conversation. Geopolitics always in play, and tech companies get drawn into the crosshairs of tensions between the two sides. How do you take that into consideration? How is that shaping your investments in tech?
So I think it's a tale of two halves, so to speak. So on the one hand, we have these national champion technology companies in the United States. And in some respects, because they're competing globally, we want to do everything in our power to enable them to compete the best they can in a global environment. On the other hand, there are arguments that can be made that certain companies like Google and so forth might have antitrust scrutiny that has merit. And so how do you balance those two considerations? And it's a very tricky question because at the end of the day, we want to be competitive on a global basis, but at the same time, we don't want these tech behemoths in the United States to be suppressing competition for up-and-coming technology companies that are coming out of Silicon Valley. So how do you strike that balance? And it's a very hard question.
One company, of course, that has been caught in the crosshairs is TikTok. Take a listen to what Trump had to say about the company.
It's important, and it can maybe even bring us closer to China. We had a very good meeting with China. I was surprised. I didn't expect it to that extent, and I'm going to speak again with President Xi on Friday, and I think that'll confirm things up.
Of course, Trump suggesting perhaps we could see a breakthrough after years and years of this long-lasting saga. What's your take on how the TikTok case is getting handled?
So it's a very tricky topic. I think TikTok has so much cultural relevancy in the United States that there has to be a way to land the plane. And so I think what President Trump is talking about is such a scenario. Now, the intimate details of that I'm not privy to, but I don't think you can go a route where you just cut off TikTok in the United States. There would be quite the uproar, especially amongst our younger friends. So it sounds like he's figured out a strategy for that, and I think that's the right thing to do ultimately.
TikTok won't be the first and the last company to be caught in such a scenario. What assumptions are you making? How might this play out in the tech space?
Well, again, just given the geopolitical tension between the United States and China, and so TikTok is the best example of this that is straddling both of these worlds, but there are other companies that could also be in this space. And so it's hard. I think TikTok, though, is unique because of the cultural relevancy that it has in the United States. So it's kind of the bellwether example that I think will set a precedent. And then once that precedent is set, then we could look at that in terms of how these other companies may play out going forward.
How are you looking to deploy in Asia?
So again, as an American investor, it's hard to invest in China.
It's hard in China, but then there's India. There are other countries which you can. Thailand, Indonesia.
It's hard because there's only so much time in the day, and so It's great to be here. This is a fantastic event here at SuperReturn. It's a great event, especially in the sense that you get to see so many people in one fell swoop. So it's very efficient in that regard. And I just arrived last night, so I'm still kind of coming up to speed in terms of what kind of the latest trends are. But it's a great event, and I'm very, very curious about what the opportunities are. That being said, I'm a big believer that one does not parachute in and expect to be the smartest person in the room. There are local people that do this 24/7. So talking to those people and getting a sense of what's actually going on is usually the best place to start.
But which are the most investable opportunities in terms of space? Is it AI infrastructure? Is it healthcare? What is it that's exciting you right now?
So I think taking a kind of a picks and shovels approach, especially with respect to the AI topic, is probably the right way. Going back to what we spoke about a minute ago, pure play AI is very expensive, at least back in the United States. So to parachute in and think you're going to pick off a good deal at a good price is probably not realistic. So trying to figure out who are the groups that are actually providing those picks and shovels to these companies is probably a better entry point.
You know, you've been pretty excited about Hong Kong. You talked about the frenetic energy, and you said that not too long ago. And you said for a 25-year-old Jack Selby, Hong Kong would be the place of choice. Is Hong Kong still a place of choice for Jack Selby, who's 51?
Well, I think Singapore is obviously a fantastic place. And
you cannot save yourself by saying that.
and when we were doing PayPal, Singapore was our international hub. So we had essentially Singapore Inc. All of the backers were supporters of the company. So this place has a very near and dear place in my heart, and it always will. The 25-year-old version of myself, though, Hong Kong is also a very exciting place. It has this frenetic energy. It has the amazing skyline in the bay and the backdrop of the mountains. And it's on the cusp of the largest market in the world. And that market in China is just getting going. If it's a U.S. baseball analogy, I don't know, it's probably the top of the second inning in terms of the amount of the game that's left to be played. So if you have the ability to invest in China and you can't actually be on the mainland, Hong Kong is probably a pretty good perch to have.
So 51, Jack Selby is still excited about Hong Kong. What are the risks, Jack? I mean, what are the risks that you see for investing in a market like Hong Kong?
So Hong Kong is a great place for young entrepreneurs to go, just like Shenzhen is right across the way. And so between the two, I think you can straddle both and see great opportunities and just decide as you will. So I think it's a great position to be in. But at the same time, Singapore, I think, is a much better relative launching point if you have a purview that's looking at Southeast Asia. So it just depends on what you look at in terms of the opportunity set.
Are there any tech trends that have been underestimated, underinvested, that people should be paying more attention to?
I think it's more about the bubble that's going on. So the AI bubble is real, and I don't think enough people talk about it. And if you were able to be an early investor in OpenAI, then congratulations. That's a great place to be. If you're coming and investing at OpenAI at a $500 billion valuation, I honestly don't know about that. So I think that is the more dominant topic that is going on, at least within Silicon Valley circles, that doesn't get talked about enough. And how it shakes out, it's going to be fascinating, because if you got in early, fantastic. If you're getting in today, I'm not as sure.
But I guess that's playing out in the volatility in how some stocks are trading right now. Palantir, case in point. What are people missing? I mean, what are they not taking into consideration? Is it being mispriced in any way?
Well, I'm not an expert on Palantir, but the company certainly has done a very, very good job of catching the tailwind in its sales of the AI phenomena. And it's very well positioned to do that. Now, is it properly valued at wherever it's trading today? I don't know. I don't have a point of view there. But it's one of the few companies that's come about here recently that can take advantage of this AI phenomena in a bona fide way. So I think that's really been beneficial to them as a company.
The thing is, this company, like a lot of the other tech companies, are also under a lot of scrutiny. How do you square that as an investor?
It's tricky. There is a lot of scrutiny, and there is a lot of volatility in the market. The tariff talk back in the United States, it's very hard to read those tea leaves. So I think now, since we're roughly about 8 months into the new administration, I think people have a better grasp on how to interpret those tea leaves. But it's still very hard. And so if you're looking at tech pure play investments, I don't know. I mean, again, there's kind of a geopolitical divide, and U.S. companies that can be more pure plays, I think they could be a good home for investment capital.
The thing is, when you take a look at companies like Palantir, I guess Wall Street finds it difficult to define what exactly the company does, right? Whether it is an AI play, defense tech, and so on and so forth. I know that you say you're not an expert on Palantir. I'm just wondering, 5 years down the road, how might such a company look like?
Well, with Palantir...
The DNA, right?
Sure,
what would the DNA be?
Well, I think Palantir, in the early days, people were confused and didn't really understand the company. And so there was a misconception that it was more of a services-based company. And clearly the company has proved those misperceptions to be rightfully wrong. And so it is truly a technology company, a very, very powerful technology company that is leveraging AI arguably better than any company in the market, and its valuation reflects that. So, but Palantir also is not an overnight success story. It was started a very, very long time ago. It's been a hard road like any startup is, with ups and downs, but just desserts to the company and where it stands today.
So 5 years down the road, how might it look like, you think?
I don't know. That's probably above my pay grade. Certainly, when you have companies that are run by world-class entrepreneurs. So Alex Karp is a world-class entrepreneur. It's kind of like when people ask, well, what about Elon Musk and what's going on with Tesla and so forth? And the honest answer is I have absolutely no idea. But the one bit of advice I would give is that there are many companies you could short. There's a whole plethora of companies that are publicly listed that you can short. And why would you short Elon Musk, who is just a powerhouse in and of himself? And I would say the same thing probably applies to Alex Karp.
And that leads us very nicely to what's hype and what's not. If you take a look at what's out there in terms of tech plays, okay, maybe you can't single them out by name, but in terms of trends, what's hype?
Goodness, it's always hard, these crystal ball type questions. I wish I had the crystal ball. I'm not sure that we do. I think more generally speaking, though, if you look at where we are in the cycle, so we've come off of the cycle top of 2019, 2020, and at its most peak 2021. And now that we've come down in the cycle, we're beginning to tick back up. And you're seeing green shoots kind of across the board. So from a timing of the cycle perspective, this is a fantastic time to invest. Whereas if you were plowing money into the market at the top in 2021, the converse was probably true. It would probably be very, very hard to make money if you were investing in growth private tech in 2021. So right now, early stage perspective, beginning of the cycle, as we begin to tick up, fantastic time. This is the time when the next PayPal or the next Google or the next Palantir gets started. So as an early stage tech investor in Arizona, this is a fantastic time.
You talked earlier about how it is difficult for an American investor to invest in this part of the world. What would it take for you to be plowing more money here, investing in more companies in Asia and Southeast Asia?
Well, I think one of the questions in Southeast Asia is how many exits have there been? How many IPOs have there been? How many large-scale acquisitions have there been? And I'm not an expert on this, but since you asked, my sense is that there only have been a relative handful. And so as that number grows, that will give investors more confidence that they can deploy capital here and have a liquid outcome at some point, because when you take money from your LPs, you're on the clock. You normally have an investment term of 7 years, and maybe that extends out to a decade. But if you don't see a track record of liquidity outcomes, it's very difficult to take money from your LPs and promise them that there's a realistic chance of having a liquidity outcome within a decade. So the more of these outcomes that you see, the more LP capital you can attract, and it becomes kind of a self-fulfilling story. So I think it is in the process of getting there, but it's not quite there yet.
So it is also the path to profitability, right?
Yes, it's a path to profitability and it's a path to liquidity. And the more that you can have that liquidity as outcomes for the venture funds and for their LPs, the better that will become, because it will attract more LP capital that then can be invested into the local companies. And again, it becomes a virtuous circle.
And in a way, it is about transparency. And linked to that, we heard Trump saying just today that, he's proposing that companies have report earnings twice rather than 4 times in a year. Your thoughts on that? Is that better or worse? I mean, the likes of Jamie Dimon and Warren Buffett have suggested the same.
I think you can split the baby, so to speak, and have both. Because I think on the one hand, it's a bit of a hamster wheel. And quarterly reporting, so when we were public at PayPal many years ago, it's a hamster wheel. And so you're not managing the company, you're managing to next quarter's expectations. So that can be problematic, if not outright distracting. So there's a point of view that that's bad. However, the U.S. is very, very good in terms of its regulatory regime, its legal regime, and so forth. And that can be taken to extremes, which can be bad. But I think the reason why it is the most trusted liquid market in the world are for these reasons. So you don't want to take the quarterly reporting, the ethos of that away entirely, but could you dial it back a bit? Probably, and that would be kind of the splitting of the two.
So how does it work out?
Semi-annual reporting.
Yeah.
Semi-annual reporting. Maybe that's, because again, quarterly is such a hamster wheel. But if you report on a semi-annual basis, maybe that's a good incremental step. And then if you want to take a further step that is less frequent, then one step at a time. Walk before you run.
Okay, so just to wrap up, I just want to get your thoughts on what you're most excited about as an investor. What trends in particular?
So I run a fund in Phoenix, Arizona, and so I'm a non-coastal investor, and I get to invest in companies, Series A companies, that typically the equivalent company that would be in Palo Alto or somewhere in Silicon Valley would be 70% more expensive. And that's probably largely attributable to this AI bubble that's going on with our coastal friends. So I get to invest in an exceptional discount, and it's really a bet that are there world-class entrepreneurs that live in the other 47 states outside of California, Massachusetts, and New York. And my bet, yes, there is, or there are, I should say. And so I get to coach these companies up after investing at an incredible discount, and then I go take these companies to my coastal friends, and if they want to pay up, then all the better.
Jack, great having you with us. Do come back soon.
Thank you.
Jack Selby, managing partner at AZVC. Still to come on the show, we discuss the increasingly complex political challenges facing investors in Southeast Asian markets with Raisewell Ventures founder Kline. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insights, coming to you live from SuperReturn Asia in Singapore. Let's take a look at how the markets are doing right now. We're seeing pretty much gains in a lot of the Asian markets. The Kospi up by more than 1%. Asian nations have been rocked by volatility in recent weeks, but while investors are brightening on Thailand after its latest political crisis, they're also pulling away from Indonesia amid growing concern over those violent protests which we saw recently. Let's get to our Asia equities reporter, Winnie Xu in Hong Kong. Winnie, this is a real shift in sentiment for both Thailand and Indonesia.
Yeah, it is quite interesting what we're seeing here right now, right? When you take a look at the month-to-date gains, the Thai stocks are up more than 3%, while the Indonesian ones are just up less than 1%. And it's pretty big of a reversal when you think about how much the stocks have trended this year. Indonesian stocks were up more than 10%, while Thailand was down 7%. So it's an interesting situation because both countries are really going through lots of political changes, but investors are taking it very differently. On one side, you have Thailand going through having a new prime minister and the new cabinet potentially coming with more financials, more stimulus on the consumption side of things. So investors are saying that this might be the worst This might mean that the worst is over for the Thai stocks. On the other hand, when it comes to Indonesia, things are a little messier, and we are hearing from fund managers that they think that things are actually going from bad to worse because they're looking at these ongoing violent protests, and also the finance minister, who was very highly regarded by the overall international investors, are actually suddenly replaced, and hence there is a lot more for the country to prove. Although we do have this new finance minister, there is liquidity injected into the market. It takes time for that to translate into the economy, and the new finance minister now actually needs to juggle a few things while keeping up with boosting the strength of the economy. He actually also needs to keep the budget deficit at 3%. So there is a bit more time for investors to figure out where they want to position when it comes to Indonesian stocks.
The the thing is, these countries are no stranger to political uncertainty, right? And we've seen them, bounce back, showing their resilience. You got to question right now whether investors are looking at this as an opportunity. How are they positioning themselves?
Yeah, so actually when we look at fund flows, we are already seeing that the shift in sentiment driving the relocations of assets of investors. We heard from BNP that the fund manager was shifting away from Indonesian stocks and underweighting Indonesian stocks while lifting the ratings for Thai stocks to an overweight and adding more exposure there. And actually, they are also looking into these sectoral preferences when it comes to Thailand, focusing on the stocks that would benefit from consumption, from tourism. And when it comes to Indonesia, hiding into the ones that are more of a high yielders because investors are expecting the economy to be hit by lower growth, and also the profit margin to be hit by just overall the down trading of things. So this kind of shifting away from the sectors that are exposed to geopolitical tensions and hiding into the safe havens are what we're seeing right now in terms of positioning.
Winnie, great perspective. Asia Equities reporter Winnie Xu there. Our next guest believes the recent political uncertainty in Southeast Asia raises questions about regulation, contract enforcement, and market stability. Kline has more than 20 years of deep tech and investment experience. She's the founder and managing partner of Raisewell Ventures, a global early to mid-stage fund linking ASEAN with Silicon Valley. Jeep, good to have you with us.
Thank you for having me.
So how are you digesting what's been happening in this part of the world, in Indonesia, in Thailand? The political situation, is that derailing how you feel about the attractiveness of these markets?
I have to say this, venture capital investment, it is a long-term investment, okay? So we're going to see all kind of, political situation, economic situation, the interest rate change over the course of the 10 years. And that is very normal. And not that, we don't see any impact, the short-term impacts of those events. I mean, even in the U.S., we see the impact as well when the policy has changed, right? But for us, we need to know that our foundation and fundamentals are very strong. Since you mentioned about deep tech, I think that is one of the key strengths of Southeast Asia region, whether that may be climate tech, manufacturing and supply chain tech, as well as health tech. And these are the key areas that we should look into as a venture capital investor.
You talk about taking a long-term view. If you take a long-term view, a 10-year view of Indonesia and Thailand, we've seen political uncertainty over and over and over again. That sets investments back. That limits the kind of returns that you can see. Yeah. Surely that is consideration.
Yep. No, I completely agree. If without those kind of situation, I think that the tech industry is going to take off even stronger. But we have to be very positive. And this is the thing about being the venture capitalist. Not only it is a long term. So let me highlight some of the things. Number one, the foundation, especially on the private sector, is very, very strong. Okay, we still have top academic institutions, and we see here also in Singapore, whether that may be NUS and NTU, that continue to use the IP to commercialize, and from the commercialization, we see some of the company scale successfully. Now, particularly Thailand and Indonesia, don't forget that Singapore also have to rely on them in a way that they have larger population, right? Venture capital investors, not only we have the long-term view, we also care a lot about the size of the market. In Thailand, we have 70 million population. In Indonesia, we have hundreds of million population. Altogether in Southeast Asia, we have 700 million population. And there's no way that the venture capitalists, even in Silicon Valley, should ignore us. I mean, this is the third largest in the world after China and India.
We had Jack Selby earlier on talking about how difficult it is for American investors to be putting money in this part of the world. Some changes need to be implemented. Do you see that happening anytime soon?
So why don't we talk about what changes that should happen first? I think that's very, very important. First of all, I believe we have the best talents, okay? We are very, very competitive. We have research institutions. We have top universities. Now, it's also about the risk capital, the way that venture capital works. So just to give you a specific example, right? When we invest, we have to be able to invest in early stage, not just Series A and beyond. Because if everybody want to focus on when the company is at the growth stage, nobody invests in the early stage. So that's number one. That is still a huge gap in the ecosystem in Southeast Asia. And number two, not only we should invest in an early stage company, we have to lead the round. Okay, we cannot rely on Silicon Valley venture capitalists to fly for 16 hours, even though we have the best rule of law, for example, in Singapore. But then, they should lead the round so that we follow. No, people don't do that. And not because they're not interested. Because in Silicon Valley, we have millions of deals. So they don't have the incentive, right, to come over and, shop for the deals. So the best way to solve, one of the best ways to solve the problem is venture capitalists in the local region in Southeast Asia and maybe in East Asia, because we are very connected economically. We should lead the round, invest early, and then help groom the company until they exit successfully, whether that may be IPO or merger and acquisitions.
So what are you excited about? What are the project startups that have caught your eye? What themes are you looking at?
So I really, really like manufacturing and supply chain tech. For example, we look into what are the key competitive advantages in Southeast Asia. Okay, and we know that we have one of the best talent in terms of the engineers. And, when the chip got made, say in TSMC and in other location, we still need the middle ground for manufacturing, say the test assembly and the packaging and whatnot. And that's perfect for our region. So we can deploy the talents here. And also help them upskill so that they can, grow into the higher value and innovation. So that is the area I'm interested in, which is semiconductor, full stack chip and AI company. The second area that I also really like in the deep tech, any industry and technology that would help reduce CO2. So, for example, green cement. Okay, we know that even if there is some green cement company in the U.S., it is almost impossible, to export and import cement and carry it here. So by nature, the industry is already localized or regionalized, and we should invest more in this area to transition our countries and region into the green economy. But there are a lot of things, in EV industry and battery as well. We know that a lot of car manufacturers are done in East Asia, and the parts and the batteries and whatnot are made in Southeast Asia. So these are the areas that we should use the innovation, particularly AI, as a part of how we improve productivity and efficiency of manufacturing.
Let's talk about AI, right? There's so much euphoria, and Jack Selby earlier talked about how it is in a bubble that is just waiting to burst, and perhaps that may happen in 5 years. Do you agree?
AI is actually a broad industry by itself, so I would like to kind of parse it out a little bit. Okay, so there is certain kind of AI we call LLM, large language model. For example, OpenAI, Anthropic, and so on. That chip has already sold, and we should not compete with them. I want to be very clear. The kind of AI that we should focus on is how we actually use the infrastructure and embed it in the deep tech industry. Maybe hardware, software application and services, right, to improve faster computing, to improve productivity of manufacturing. And those are the areas that I want to see the entrepreneurs localize the technology in a way that would attract venture capital industry to invest and also serve the local consumers and enterprises.
What are you making of valuations? Are they attractive?
What do you mean in AI?
For tech companies, AI companies. When you take a look at valuations in the US, for instance, they're skyrocketing, and some say that they don't actually represent the kind of returns that you may eventually get.
Yeah, I mean, there are a lot of AI companies that, in my personal opinion, really overvalued compared to the traction and the revenue that they have. And the reason that some of them are, a little bit overvalued simply because a lot of investors are competing to get in and get a seat on the table. For us, particularly in Southeast Asia, we should again look at the fundamental and how we use those AI as a part of the core ingredients that improve and create impact on our economy. Now, the way that we look at the valuation is, of course, the entire business, not just the AI part itself, right? If you have to build a manufacturing, if you have to have the hard tech and hardware, we're going to look at the traction, we're going to look at the long-term success, and of course the impact that it creates in terms of job creation and whatnot. That, at least, is what Raisewell is looking at.
The other issue that some people have raised is actually exits.
Yes.
There are fewer and fewer opportunities for that happening, and that's actually hindering the growth in the industry.
Yes. The exit market here is very thin compared to the US market, but we have to remember this. We have been doing venture capital investment only around 10, 15 years maximum. Silicon Valley has been around for 50 years. We are still in a very early stage as an industry, but we cannot escape this. What should we do? We should build the exit market. SGX, or Stock Exchange of Thailand, I believe that they have huge potential to be the bridge investment for dual listing, maybe here at NASDAQ. It means that we also have to upgrade our rule of law to really be the foundation for the high growth tech companies. Maybe changing updating some of the regulations, just to give you a specific example. So I already invested in 11 companies in my portfolio at Raisewell. And most of the companies that I talk to, they want to come to Southeast Asia. Some of them already on the verge of IPO. So I asked them, would you be interested in doing dual listing? Maybe in Singapore or Thailand with NASDAQ. Everybody said yes. Why? They know that it opened up access not just on the capital market, but also additional partnership, additional customers, and so on. The next question is how easy it is that we can facilitate them. For example, if they already have bankers in New York to help them with the IPO in NASDAQ, we should not require them or to redo the entire filing process. Right? If they use Goldman Sachs, for example, can we make the process a little bit easier so that they can get listed in both regions? Number one, right? Number two, I also heard that, in some cases, if you want to list in Singapore or Thailand, it took 2 to 3 years. That's way too long. The startup die in 2 to 3 years, right? We cannot do that. So we have to, make the audit really, really easy, and also
expedite the process.
Expedite the process, and if they already say use PwC and whatnot, we could just piggyback on them. So these are some of the things that we can fix, hopefully, in Southeast Asia.
Jeep, you've highlighted opportunities in Southeast Asia. Funding, though, in recent years have been quite a problem. Do you see a turnaround given that rates are headed lower?
Well, I am very bullish, okay? This is why I founded Raisewell Ventures. I really want to invest in Southeast Asia, and that's why I found a fund, raise money, and I know that in the first 10 years it's been difficult. The exit market is not ready, and the entrepreneurs, the way we work together in the region across different countries so that we access different markets to take advantage of 700 million population, we still have to get there, okay? But we have so many competitive advantages. We have lower labor costs compared to the US. We have lower real estate costs. That's why manufacturing and supply chain are going to be important. We have to deploy and employ mid-level engineer in a way that they can work and see how the innovation got scale, from IP to commercialization and commercialization to scalability. And so the business model that I really like is the cross-pollination model. So we talk about chip business. For example, one of the chip AI company that I invested in, when they are ready to scale, I want them to look at Southeast Asia as an option. Right? I can't force them, but what we can do is, hey, you know what? We have zero tax policy in Malaysia and Thailand. Why don't you come and see if you like the engineers here? We have NUS and NTU engineers that you can hire, and whatnot. At the same time, the companies here also need exposure in Silicon Valley. Right, so they can't just learn from the partners and venture capitalists. They can also learn from the portfolio companies in the U.S. And that's how we leapfrog and make sure that people kind of like climb up really, really fast on the innovation ladder.
Jeep, thank you so much for that. Great candid perspective. Jeep Kline, founder and managing partner of Raisewell Ventures. Still to come on Insight, after several years out of public eye, Jack Ma is back at Alibaba. We'll have more on how his return is helping to drive a stunning recovery in the stock price. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insights, coming to you live from SuperReturn Asia in Singapore. And we have breaking news. President Trump saying that he's bringing a $15 billion lawsuit against the New York Times and that $15 billion defamation as well as a libel suit against the New York Times is being brought in Florida. And social media posts, he talked about how New York Times is one of the worst and most degenerate newspapers in the history of the country, becoming a virtual mouthpiece for the radical left Democrat Party. And that, of course, comes from the president himself on social media. Trump bringing a $15 billion defamation and libel suit versus New York Times. Now, in other stories, Bloomberg has learned that Jack Ma is back on Alibaba's campuses and is more directly involved in the company than he has been in half a decade. Ma was once China's wealthiest and most prominent tech leaders, and his comeback has been long awaited. For more on this, let's bring in Bloomberg tech reporter Luz Ding. Luz, why do we say that Jack Ma is back, and under what capacity?
Yeah, thanks for having me. So we have heard that Jack has been more around the campus than he ever was in the past 5 years. He's getting behind major decisions of the company, including the recent 50 billion yuan of subsidies to food delivery in the competition with his competitor JD and Meituan. And he also cares a lot about AI, and he's getting daily updates. That's what we heard. And then sources told us that he's in one case he was messaging a senior manager 3 times a day to get updates. But of course, he does not have any official title in the company as we know. But he's been around. He's been more around than he ever was in the past 5 years.
Alibaba stock has been rallying lately. How much of that can be credited to Jack Ma?
Yes, so the stock rally we have seen has a lot of reasons. The overall Chinese tech stock revaluation is one thing, but for Alibaba in particular, when we talk to people, the one word came out a lot was morale. Jack's comeback definitely boosted employees' confidence because during the years that he was absent, Alibaba wasn't essentially having some of the best days, the post-crackdown and the COVID years, and now he's back. That also signals that a lot of the bad days are gone, and the company is now back on track, on a steady ship, and that gives a lot of confidence to the employees that they can stay in the company, that they can work harder, and then continue to fight. And of course, Jack, as we see Alibaba now, the major growth. The promising growth point is AI, and that was originally Jack supported the venture in the beginning, and then now it's just it offers another lifeline to the company rather than its competitors JD and Meituan, which is very deep into the food delivery war.
Luz, thank you so much for that. Bloomberg tech reporter Luz Ding coming to us from Hong Kong. Meantime, here are some of the stories we are following. Tencent has begun marketing its first bond sale in 4 years. The firm is said to be looking to sell 5-year, 10-year, and 30-year offshore yuan-denominated bonds. A source says the deal could be priced as early as Tuesday. This would be Tencent's first sale of dim sum notes and its first bond offering in any currency since April 2021. Elon Musk has responded to his massive pay proposal from Tesla's board by buying about $1 billion in shares, sending the stock into positive territory for the year. He made the purchase through irrevocable trust on September 12, signaling confidence in Tesla's future. Musk's $1 trillion compensation plan includes an incentive if the company hits a $400 billion adjusted earnings target by 2035. And before we go, here's a look at our show for tomorrow. Barclays Global Chairman of Research, Ajay Rajadiksha, will be joining us as we enter a stretch of central bank rate decisions in the coming days, starting with the Fed. That is it for Insight here at SuperReturn Asia in Singapore. Horizons, Middle East and Africa is next. Keep it here with us. This is Bloomberg.